wasn't highly educated. I finished high school with like a 1.6 GPA. Not because I'm not intelligent. I only care about the things that I care about. And so I would dive deep on that. Like I would get like an A plus in a business oriented class, but an F in psychology class. 20 years old. I was probably on my fourth, minimum wage job at that time. Worked a bunch of fast food, worked at the golf course, worked as a dishwasher. And I hated it. I was like, this is no way. I got fired from every one of those jobs. And I was like, this isn't going to be for me. I took that money that I had been saving for that 8 years and invested it in real estate. I found real estate around 31. 8 years later, I've done close to 400 deals. I've been working with them for a while, but I was on month 2 of not even getting paid. The previous employer, late as always, pulling in, and we just kind of did an awkward wave at each other. And they had to pull in and find out they no longer had the contract, and I did. But keep in mind, like, I didn't steal the company. They were way behind on payments. They were going on anyway. They owed me money. It wasn't the prettiest scene, but that's neither here nor there. What happened was I took advantage of an opportunity that was presented to me. Yeah. And from there, I grew it into what it was. So I just learned how to ultimately protect myself, how to extremely and deeply vet borrowers. And then from there, it was just about deploying the money. And so first deal, 115,000, that built to 400,000, then 600,000, then $1 million. And now I have a few million out in private money.
All right, welcome to the Investors Club podcast. I am your host, Marco Cabrera, and joining us today, we have Jon Schoeller. Now, Jon's transformed his life by diving into real estate, achieving financial freedom, and now he lives on his own terms, traveling and enjoying time with his family, all funded by his savvy investments. Today, he's here to share his journey and insights on how to start from scratch and find success in real estate investing. Now, let's learn from Jon's experience and discover the path to financial independence. Jon, how you doing, bro?
Pretty good, man. Appreciate you having me on. I wish I could say your name as cool as you say your name.
I need gotta roll that R.
Yeah, I need to work on that. That's cool, man.
Well, I could say your name in Spanish if you want.
Juan, right?
Jon Schoeller.
Yeah, there you go. Yeah, I was always told John is Juan in Spanish. That was my name.
It is.
Yeah, cool, man. I appreciate you having me on. I'm excited.
No, man, thank you. I know it was a little difficult. Your schedule, you've been doing a lot of traveling. Where are you at right now?
So I'm back in West Virginia right now, which is my current home state. This is where I do a lot of my investments. But yeah, for the last 9 months, I've been out of the country. I just got back last week.
Nice, man. But yeah, thank you for taking out the time to be here with us. You know, our listeners, I know they're going to get a lot of gold from this. So guys, if you're listening, if you're watching, make sure you get the pads out and start taking notes because Jon's got some gold for us. All right, man. So let's get right to it. So what was your life like before real estate?
Yeah, so like, told the story a few times, but I'll try to give you the cliff notes of it. I grew up, I would say less than lower class. I would just say lower class. I grew up in the middle of the country for a little bit, and then I spent most of my teens in a trailer park, and didn't have any financial education. My parents, I don't blame my parents for it. They didn't know any better either. I wish they did. I wish they just put a little bit of money in a Roth IRA here or there, but that wasn't the case. But they just didn't know any better, and so they couldn't teach me any better. And I think I was around 20 years old. I was probably on my fourth, minimum wage job at that time. Worked a bunch of fast food, worked at the golf course, worked as a dishwasher, and I hated it. I was like, this is no way. I got fired from every one of those jobs, and I was like, this isn't going to be for me. Like nothing against people with W-2 income. My wife has W-2 income. I think it's great for most people. It is steady, it is dependable, and you don't have to worry when you clock out. But I just cannot be told where to be, when to be there, and then ask for permission to go somewhere. Like that doesn't sit well with me. And so I knew early on I was going to have to be an entrepreneur. So around right when I was turning 2021, I started my first company, and it was a moving business. It was actually a delivery business to start off, and I turned that into a moving company. I sold that about 8 years later. That's still running today, Moving Forward in Charlottesville, Virginia. Shout out. Nice. It's still running today. I think they got like 15, 20 trucks. It's a big outfit, so it's really cool to see that. And I took that money and that I had been saving for that 8 years. We lived well below our means. We still do. Some would say we're still extreme, and that's okay. It got me here. I'm not gonna give it up now. And took that money and invested it in real estate. I found real estate around 31. 8 years later, I've done close to 400 deals, and I've been rocking and rolling ever since. I've tried multiple strategies, and we'll dive into some of them here on this podcast. But real estate was the ultimate answer for me.
That's awesome, man. So you started up a business and made money in that business, used that money to invest in your first real estate investment. Now, as far as the business, how did you learn how to like create a business, being that you never really had any type of background in business, you definitely had the entrepreneur spirit because you can't work for anybody, right? That's that's just in all of us, right? At the end of the day, we just can't stand it. So how were you able to scale a business enough to be able to sell it for profit? I'm assuming to be able to get into real estate.
Yeah, so I didn't know anything about business, to be honest with you. I wasn't highly educated. I finished high school with like a 1.6 GPA. Not because I'm not intelligent. I only care about the things that I care about, and so I would dive deep on that. Like I would get like an A plus in a business oriented class, but an F in psychology class. I couldn't keep my attention, and so. I was working for a company at the time, and they were the delivery company before I essentially took it over. And I didn't know I had a knack for management. So I started working for this company, and like just out of nowhere, I started seeing like, well, I could do this more efficiently, or I could route the deliveries over here so we spend less in gas. And this wasn't even my money at the time. I was just like, this makes sense to me. And I was like, um, oh, if we get the membership over here, we can save 30 cents a gallon on gas. We're spending so much. And I was just doing the math. And I didn't know it at the time, but this was all entrepreneurship like mindset, efficiency and systems and processes. And I just had a knack for it. And I didn't know at the time that was going to develop. I thought I would just work somewhere. Like I thought I would just work somewhere for the rest of my life, like my parents did. And I knew school wasn't a possibility, but around this time, all of my friends were in college, so I didn't really have anybody to look up to or see like what could be. It's definitely not in the entrepreneurship world. Well, like fast forward, this company that I was working for, they did not have that management ability. And so I was like a month two. I've been working with them for a while, but I was on month two of not even getting paid. I was always
Wow.
a good saver, so I could keep going without getting paid. And I liked the job. I liked the business so much that I kept doing it. And I knew that they were going to eventually have to pay me back anyway. Well, anyway, uh, they were on the verge of going under. And one of the biggest contracts, one of the biggest delivery contracts at that time, came to me and said, "John, we pretty much see you're running the show anyway. If you go get a truck, I'm just letting you know we're letting your current employer go. I'm gonna let you know that right now. If you get a truck over the weekend, I'll give you the contract on Monday. If not, we're gonna be looking for somebody else." And I was like,
Wow.
"Oh wow." So I literally called up a friend. Shout out Drew. I knew he had. I did not at the time have $7,000 saved up, and I knew he did. He had saved all through high school and stuff. Anyway, long story short, borrowed the money from him. Went and got a truck that weekend. I showed up Monday at the dock, load up the deliveries on my truck. I'm pulling out with my truck with all the deliveries. The previous employer, late as always, pulling in, and we just kind of did an awkward wave at each other. And they had to pull in and find out they no longer had the contract, and I did. But keep in mind, like I didn't steal the company. They were way
Right.
behind on payments. They were going on anyway. They owed me money. It wasn't the prettiest scene, but that's neither here nor there. What happened was I took advantage of an opportunity that was presented to me,
Yeah.
and from there I grew it into what it was. And yeah, I exited 8 years later. It ended up becoming a moving company, not just a delivery company, but I had contracts with like 20 stores inside Charlottesville area, and then did most of the moving for University of Virginia College.
Wow, that's awesome, man. Yeah, wherever you're at, if you're listening, if you're watching, wherever, whatever you do, make sure you do it like you're doing it for God, right? Because it doesn't go unseen. Like people saw your work ethic, they saw what you were doing, they saw that you were picking everything up. You look like a person with integrity that they could trust. That's why they approached you and gave you these contracts. And you were prepared for that opportunity because all the work that you already did, the sacrifice that you were already living, right?
Yeah, keep in mind, I didn't have anything. This is what I tell everybody. Like, you're gonna start with nothing. You're like
Yeah.
most people listening to this aren't gonna start with a leg up. Okay, if you did, congratulations. I hope you take advantage of that. But most of us are gonna have to figure it out. You're not gonna have a lot to offer at first. Not in like money or an experience, but what you can always offer is do what you say you're gonna do when you say you're gonna do it. If you do that for long enough, eventually your value will stand out, and people will pay you for that. People will pay you just on that. It doesn't matter that you don't have a degree from Harvard. It doesn't matter that you don't have all the experience in the world. People will pay you literally to show up, do what you say you're going to do, and do it on time. Dependability is in huge shortage today, huge shortage. So if you can do that for long enough, eventually you will get into the right doors.
Yeah, it's good, man. I agree with you. Dependability there's a shortage because there's so many distractions in this world,
Yep.
right? Like people are so distracted on their phone, on social media, or how other people are living, they lose sight of the opportunity that's right in front of them by just delivering, just
Yeah,
being on time, just doing what you say you're going to do. You could literally create a business around
for
that, man.
sure.
Yeah, that's awesome,
You
brother.
don't even have to be the best at that business, but like somebody, like let's say the other guys, let's say you started a painting company, right? You paint exterior of houses, great. You don't have to be the best painter. I want you to be good enough. I don't want you to deliver a bad product, but you don't have to be the best painter. You have to be the painter that shows up to the estimate on time, the painter that gets back to the client in a timely manner and writes a professional email, and the painter that shows up to the job and finishes the job on time. You do that consistently enough, you'll beat the best painter that doesn't have any of those other qualities 9 times out of 10. I promise you.
Absolutely, man. So in real estate, I started investing. Obviously, real estate was that stepping stool where I was able to make enough capital to invest in different businesses. So 2 years ago, we started a lawn care business, and I just saw the opportunity there because tech in lawn care is just very minimum. People just they use like handwritten invoices. They don't know how to systemize or processes. They just don't understand it, right? So I'm like, all right, this is an opportunity. Long story short, most of the clients that we deal with, their complaints is that they can't get in touch with their landscaper. They don't know if they owe a bill or they never received the invoice. They haven't paid their bill in months, and that's just the common problem. And I'm like, okay, I could solve this problem. I could be super efficient. I'll make sure you get an invoice. I'll make sure your card's saved on file so you're making payments. And it's just so true, man. Like you just have to pay attention to those little things.
Even if you just communicate, communication is another thing that where a lot of entrepreneurs, a lot of businesses fail. A lot of contractors in general, especially in the construction world, they're forced to be business owners, right? Because that's the nature of the business, right? They're really good at painting or drywall, but they don't know how to run a business. But the way that it's set up, they're subcontractors, so they have to be businessmen or women, and they don't know how to schedule. They don't know how to do bookkeeping. They don't know how to do invoicing.
Yeah.
They don't know how to communicate with a customer. And so they actually fail at everything else. And so if I would argue that most contractors fail because they don't get people in the right seats quickly enough to do all the things that they're bad at. You just focus on drywall, but you need to quickly, and I know you can't start like this, but you need to quickly find someone that can handle the invoicing, the communication with the customer and all that. Otherwise, you're going to go out of business. That's something that I was actually decent at, is multitasking. I would be on the job moving furniture, and in between, I'm running to the cab of the truck, taking a call with a client and calling them right back. Because guess what? As you know this in the landscape business, they're not calling your landscape business and hoping you call them back. They're calling the next one if you don't answer.
Yeah.
They're literally going down the Google listings now. It used to be the yellow pages, but they're going down the Google listings and they're just calling people, and the first one to answer and answer like respectfully, they're going to probably go with that person because people are in a hurry and they value their time. So my job, like the reason I got so many moving bookings is because I was always I always answered, or I called you back within minutes because I knew you were going to call the next moving company.
Yeah. That's so good, man. So back into real estate. So can you describe your first real estate deal? Like what was it? Was it a buy and hold, fix and flip?
Yeah, so I had like a interesting thing. So I'm actually really risk averse. People don't take me for this for all the investments I have out now and the money I got out in lending. But it's all very calculated, and I don't like to make moves until I'm super confident. That's pros and cons of that. I haven't lost a lot of money in my life. I have never personally lost money on a real estate deal. I've lost money in the flips with my company, but I've never personally lost money on a deal. And I think that's because I do move a little bit slowly, but I move intentionally. But that has its negatives. And I want you guys to listen to me if you're listening in and you've been talking a lot of crap about getting started, but you haven't made any movements. It's probably because you're too risk averse or you overanalyze like myself. So what I knew I needed to do eventually was get around people that would move a little bit faster than me. So how I got into real estate is I did a bunch of research, read all the books, watched all the Bigger Pockets episodes, did all the stuff, was doing that for a couple of years, went to all the meetups, but I wasn't taking any action. Now, in my defense, at that time, we were travel nursing. My wife was a nurse at the time. She's now a nurse anesthetist, but she was a travel nurse at the time. And we were living in like Maui in California. And so I had some money from where I sold the company and saved up, but I didn't have California money, all right? Not at that time. I'd go back, maybe I'd go back now, but I did not have, like you needed $1 million just to get started out there. So anyway, I wasn't taking a lot of action, so I knew I needed to get around people who were. So when she got accepted in the nurse anesthesia school here in Charleston, West Virginia, I said, you know what? That's actually a really low cost of living market, and I'm just going to reach out to flippers in that area. I thought flipping was just the thing I wanted to do,
Mhm.
and So I reached out. It was probably 3 or 4 sets of people I reached out to, and Andrew and Steve, my partner still to this day, met me at McDonald's. I think Andrew met me at McDonald's. I went in to just shadow them for a week. This was almost 7 or 8 years later, and like I was telling your audience earlier, I showed them my value. Showed up to the meeting on time, and I just showed them a ton of value over the first 2 weeks. And a lot of sequence of events, but we ended up becoming partners 6, 7 months later from there. And we've done over 300 flips in Charleston, West Virginia to this day. So my first deal was weird. It was like a bunch of deals with partners, but my first ever personal deal was a private money loan. I put $115,000 into one of our own flips and made a return on that.
Nice, nice. Now that return, did you make profit? Like, were you hooked after that? Like, this is what I'm doing. This is what's
Yeah,
going to take there.
yeah, kind of. So that first deal didn't go like that. At 115,000 out at the time, that was a ton of money to me. I was nervous, Nelly, and I knew Steve and Andrew, but not like I know them now. So I was still a little bit nervous. Um, and I just never gone through the process before being the lender. We were borrowing money to do the flips, and we always paid them back. So I should have been comfortable with it, but it's something with your own money. So anyway, it went into contract, then it fell out of contract, back to being a nervous wreck again. But anyway, it sold for cash like 2.5 months later. I think I made 15,000 on my 115, a fantastic return in 2 months. And from there, I've done over 100 private money deals.
Wow. All right. So your first approach was really to be a lender for real estate.
Yeah. I ended up buying rentals and stuff and doing a bunch of owner finances, and we have an Airbnb. So I do a lot of the other strategies too now,
Yeah.
but people mostly know me for private money lending.
That's awesome, man. Now, you got to taste the private lending. What was next? Like, were you like, look, I could do this on multiple deals with multiple people? Like, how did you start growing the lending side of things?
Yeah, so from there, it's so at first, I was only lending inside of my own company with Andrew and Steve, and so that was nice, but I wanted a little bit higher margins. Like West Virginia, we are a consistent return. Like our investors love it here, especially if they're from outside California or they just trust me a lot. They love getting 10 to 12% consistently. They don't want to go look for third-party borrowers or random borrowers, I would say, and they don't want to go in other states. They just like the consistency here. And so we raise a lot of money right here, and that's how we do all the flips. But I like to take my personal money and I like to go into states and with partnerships where there's a little bit higher margin. West Virginia, we're buying a house for like 100,000, we're putting 50 in it, we're selling it for like 180 to 200, right? So a $30,000 margin is what we're shooting for. Great. But I like to go for higher margins because I like to go for equity splits in the deal. So if we make $100,000 on the deal and I'm a 1/3 partner on that deal, I'll get $30,000, right? And so that 33,000 actually. And so I like going for those deals. So it's just about building partnerships, finding good borrowers. The deals are second, the borrowers are first. You're betting on the jockey, not the horse. If the person has no intention on paying you back, it doesn't matter if there's a $500,000 margin on that house. You got to get your money back. So I just learned how to ultimately protect myself, how to extremely and deeply vet borrowers. And then from there, it was just about deploying the money. And so first deal, 115,000, that built to 400,000, then 600,000, then a million. And now I have a few million out in private money deals.
That's awesome, man. And private money is it's always the way to go. Like I have a lot of private investors that we use for our deals,
Yep.
and yeah, it's just once you build that strong relationship with a private lender where there's confidence and you make sure that you can secure their investment. Yeah, it's so much better than dealing with the bank, and you can outbid people, right? Because you can get deals done a lot faster, and any seller would rather work with you if you're dealing with private cash.
Yeah, I get asked all the time, John, why do they go with you? Like, why would they pay you 12 to 30, 40% interest or like half of a deal or a third of a deal versus going to the bank? The bank's too slow. The bank's too slow. If you go to the bank when you want to buy and hold, that's absolutely you. You want that 7, 8% interest rate. The twos and threes are gone, but right now you get 6 to 8%, and that's moving. But you get that 8%. That's where you want to lock in long-term financing. But if you're doing deals that you're in and out in less than a year or two, then you can pay that short term money, and you got to because you need the speed. The seller doesn't, the seller, the bank, or the foreclosure or the off market deal doesn't have time for you to wait 45 days to get approval and funding from the bank. Not only do they not have time, even if they did, a cash buyer is going to come in and kick you out anyway. So I'm that person. Like my borrowers know, all of my borrowers know, we can fund any deal in any state. I will fund it in under 24 hours, cash in the bank, any deal, right? With established borrowers. These aren't for random borrowers. And so just to be able to move with that speed, they'll pay the price.
No, absolutely. Yeah, it's the name of the game, especially when
Yep.
it comes to real estate, right? It's all about speed. How fast you could get it done for the seller, how fast you could get it done to flip and put it on the market, right?
Yep.
So that's what it's about. Now, any advice on new investors? Because there's a lot of people that might have 401k, might have an IRA that they're sitting on a decent amount of money. They want to invest. They don't really want to deal with the headaches. I deal with them all the time because they're a little older, right? So they don't want to go into a flip. They don't want the
Yep.
responsibility of that, but they don't want their money just sitting there doing nothing, right? So, what kind of advice would you give somebody who's in that situation?
Yeah, I'm 38 and I don't want to be hands-on anymore. I stopped buying rentals 3, 4 years ago. There's nothing wrong. There's nothing wrong with rentals. There's nothing wrong with flips, owner financing. All these strategies work. It's just going to depend on your personality. I never give like finite advice. I never go, I do think that private lending is the bee's knees, but also there's not a lot of tax advantages there. Like if you were to buy and hold and do the short-term, rental loophole, like it depends on what you're going for and again your personality. But if you have a self-directed IRA, so money sitting in an old 401k or an IRA, and you want to self-direct that money into real estate, private money lending is a fantastic route. Like I always say, like the reason why I think private money lending is the bee's knees is because it's hard to find somewhere where you can put hundreds of thousands or millions of dollars out and have the security of an asset behind it. I always give the same example all the time. Let's take the same $100,000. You got $100,000 you want to invest. The stock market's passive, and so is private money lending with the right borrower. Okay, both are passive. But if you gave Apple the stock $100,000, the likelihood that it goes to zero is none. But there is a really good chance. There is a chance. So your $100,000 could disappear overnight if the CEO does something stupid, if there's an acquisition, if there's big news, whatever, right? Drama can make it go to zero or way less. You won't even get an email from Apple. You won't even get an Apple iPhone in exchange for losing your money. But if my $100,000 somewhere, it's got a secured asset behind it all the time. Like what I have lent that money out for, I have a first position lien on a property if I've done my due diligence that is actually worth more than my 100 grand right out the gate, right? Because I'm not going to give you 100 grand up front if it's only worth 100 grand. I'll give you 100 grand on a property we got discounted that's worth 120 as it sits. So if you, the borrower, disappear, whatever, go to jail, something happens, I will just go through the foreclosure process. I will fire sale that and I will get my money back, right? You can't do that with stocks. And so I like secured assets backing my investment. And that's why I think private money lending is again, the bee's knees. I always say it. Like, I just think that it's, if you haven't tried it yet, give it a shot. It's addicting. But also if you're looking for the passive nature of it, I've tried, I want to say every strategy in real estate because we make up a new one every other week. I've tried probably a dozen real estate investing strategies from wholesaling, owner financing, short-term, mid-term, buy and hold, BRRRR, you name it, okay? Private money lending is the only truly passive way. I literally did a deal from the Nile River in Egypt. I sat at my pool on my cruise on the Nile River, and I wired money in 2 minutes to do a deal. I will never see the deal, and the money will come back to me in 4 to 6 months, and I can make 20, 30% return on that deal, and I'll have 3 minutes in that deal. I don't care what other type of real estate investing you're doing, you can't do that in 3 minutes. And that's why I think it's one of the best forms of investing. And that's why I love to teach others and show them how to do it, because I wish I knew about it earlier.
Yeah, that's so true. A lot of the private lenders that I use, we secure their loans, right? Like I tell them all the time, if I disappear, your money is safe, right? Like you have a first position lien on the actual asset. That
Yeah,
means I don't matter. If something
right.
happens, your money will always be secure. It might take a little longer for you to get it. You might have to go through a little process, but at the end of the day, you know that it's safe, right? And that's key. Now, what type of number would you think somebody will be able to start if they want to get into private lending?
Yeah, what market are you going in? So that's why people love wild and wonderful West Virginia, baby. So
Yeah, yeah. I mean,
I raise a lot of money here, and you could call it, some of that is from micro investors. So I say, I don't know if there's an actual definition for micro investors, but I like to say anything in real estate. I like to say anything under 100 grand. You get into micro investing, and that's because as an investor, as a lender, you really would like to have a first position lien. Like you can go into second position lien and stuff like that, but you're gonna keep getting risky. And if you're gonna
yeah,
get out of lien position entirely, you're really risky. And that's up to you, your risk ratio, but your risk tolerance. But I want first position lien. So in order to get first position lien, that means that typically you need to be able to fund 100% of the deal, or at least 100% of the purchase price.
Yeah.
So in order to do that, you got to have that amount, or know where we can get into this too, how to find the amount to lend it so you could be the middleman. But let's just pretend that we're talking about our own money right now, or go with that example. So if you got your own money, in West Virginia, we've given people first position liens for 20 grand. That's because we can buy houses here for $20,000. It's insane, I know, but we can do it. I'll give the example. We bought one for $20,000. We did no work to it. We changed the locks out. We sold it at a third party auction for 50 grand. Our investor made 12%. We ended up making like $25,000, $26,000, and we had less than a month in it. That's wild and wonderful West Virginia. Okay. So, but let's say you only have 100 grand. I say only again, because congratulations, that's a phenomenal amount of money to have saved up, or even in your retirement account. But we're talking real estate here. 100 grand is not a lot of money anymore. If you want to go get a first position lien in, say, San Francisco, California, now you're going to probably need $1 million plus. Okay. So when you say how much do you need to get started? Well, first you got to answer, which market do you want to go into? And that's actually determined, in my opinion, that is not determined by the price of the housing or the market. That's determined on where the good borrower is. I go where the good borrower is, not where the good houses are. Because again, the return only matters if you get it back. So I need a good borrower. People always ask me, how do you choose your market? I choose my borrower first, right? I find good borrowers, and then I let that dictate the market. Right?
Yeah.
So if I got someone that's gonna, like, they're a 99% chance locked to pay me back based on their other income, based on they've been married for 15 years, they're been in the same house for 20 years, they own other businesses, they make $1 million in other endeavors that can easily pay me back. That's somebody that's a 99% lock. I'm going to their market.
Yeah.
I'm not going to go chase Las Vegas returns, because I've seen like 5-6 figure flips in Vegas. Fantastic, right? But I'm not going to go chase those returns because I don't have a good borrower there. So that return's just a maybe on paper.
Are you tired of feeling stuck, unsure how to break into real estate investing? Or maybe you've done a few deals, but now you're struggling to scale. You've heard the success stories, you've seen other flip houses or wholesaling properties, and maybe you've even tasted some success yourself. But you know there's more potential and you're looking for the next step. I get it. I've been exactly where you are. My name is Marco Cabrera, and I spent years building a real estate investing business from the ground up, starting with little to no experience. Now I'm here to guide you on your journey. Through the Investors Club, I've helped hundreds of people, whether they're just starting out or doing a few deals a month, close more deals, scale their business, and build real, lasting success. In the Investors Club, we follow a clear, proven plan to help you succeed in real estate. Learn the basics. If you're new, you'll start with an easy to follow lesson on wholesaling and house flipping. If you're experienced, we'll help you sharpen your skills and identify ways to grow. With the support of our community and practical tools, you'll start finding more deals, improving your processes, and building real momentum. Whether you're just trying to land your first deal or scaling up to 6 figures, we'll provide the strategies and support to take you to the next level. Now, the only thing standing between you and success is taking the next step. Join the Investors Club community today. It's free, and you'll get immediate access to online courses, resources, and a network of like-minded people ready to help you succeed. And yes, it's free. So imagine having the confidence to spot a good deal, the knowledge to close it, and a network of investors to help grow your business. Whether you're just starting or scaling, the Investors Club will guide you from your first deal to consistent long-term success as an investor. Or you can stay where you are, watching others grow, feeling like you're stuck doing the same deals or missing out on opportunities. It doesn't have to be that way. With the right guidance and support, you can move from stuck to scaling. So take action today. Log on to school.com/investorsclub. That's school, SKOOL.com/investorsclub. Let's build your real estate future together, whether you're just starting or ready to level up your game. See you there. Yeah, so I think it's important for them to understand the amount that they have, and second, what market they want to be in.
There you go.
Now, the good thing about what you do is you're pretty much across the country, right? So you could put them in a micro market, or if they want to go in the big leagues, you go to California, New York, New Jersey.
Yeah, well, so I only borrow money for the West Virginia market. So I got a lot going on, so it's hard to. Some people get really confused. Like, John, are you borrowing money or are you lending money? I do both, but I don't borrow to lend. I've tested that twice. where I borrowed like a friend's money and lent it out just to see if I liked the process, because I got enough network where I got enough borrowers and lenders where I could essentially be a hard money company. I just sleep better at night when it's my money. But I borrow money for the West Virginia market. Sometimes I put my own money in our own deals, but I lend my own money out into other markets. I don't borrow to lend. So anybody who lends their money to me, it's going into a West Virginia deal. But we attract the California lenders. We attract the Texas and the Carolinas, the New York, places where 100 grand just will not get you a first position lien in most areas. They love coming to West Virginia. They love putting their IRA with us. They love putting their $70,000 in HYSA with us. It's only making 4%. We get them 10 to 12, and they get a first position lien. But that's the West Virginia market. Good luck doing that in downtown New York.
It's not happening. And up here in New Jersey too, it's pricey in
Yeah,
New
there
York,
you go. Yeah.
so no, that's awesome, man. Private lending, way to go. Now, any mentors that taught you this throughout your journey?
I would say yes, but he didn't. He recently passed away. He was one of our biggest investors here in West Virginia, and he didn't know he was teaching me this, but I was watching. Right. Rest in peace, Jim. He was an awesome dude.
Yeah, sorry for your
It's all right. He funded most of our deals here in West Virginia. He was our only lender for a while, and then I learned how to raise money, and I brought in a lot of other investors. But he was funding these deals, and that's before I funded my first deal. I was kind of sitting here. Like, I just remember sitting on the tailgate of Andrew's truck out front of that first deal I funded, and they were talking, and they were like, "We can get Jim on this," and I was just like, "Man, this is a good house. It's a rancher. It's got a pool." I kind of got like FOMO. I was like, "We keep borrowing Jim's money to do these deals, and paying Jim back, but I got money. Why don't I do one?" And so I kind of followed in Jim's footprints. I was like, well, he's doing it, and he's sending his money out, and he's a really established dude, and he knows what he's doing, and obviously he doesn't think this is too risky. So I was just sitting there on the tailgate, and my partners were both flabbergasted. I think when I said it, I just got up the courage. I said, "I'll fund it," and they were like, and keep in mind too, I wasn't very open about money I had, so they probably were like, "Yeah, you'll fund the 115K, sure, buddy, right?" But they were like, "You sure?" And I was like, "Yeah, I'm gonna do it. I'm tired of watching. I'm tired of watching Jim get the return, and not me. Not that I want to take Jim's return. We got plenty of
course, but
houses,
yeah,
but I
you
was
want
like,
into.
and so I think Jim would like be that mentor. He's like a solid mentor. Of course, I've studied other people since then and watched them, but I kind of developed my own system and process to this whole thing. I think that where my knack is in life is I'm really good at looking at a business and systematizing it and making it extremely efficient. And so I've developed my own terms. And fast forward today, it's kind of cool, full circle here. I've kind of taught Jim and his wife kind of how I lend.
Yeah.
Right. And so they had a way that they were doing it, but it was a little antiquated. It wasn't as much protection. It wasn't as tracked as well. And I've kind of showed them, or now I showed his late wife. Sorry, not his late wife. Showed his widow, Judy, showed her how to do this method. And so it's really interesting how it comes full circle like that. But anyway, yes, we've all had mentors, people we watch, but I've never had like a one-on-one coach in private money lending.
Yeah. That's interesting, man, because you went in and lent on that first deal without really knowing how to protect yourself. That's definitely rolling the dice right there.
Yeah.
Because
Well, I knew the paperwork side. I knew like first position lien.
Okay,
But
you
that's kind
understood
of
that.
Yeah, I understood because we were giving that to our borrowers, of course. So I knew
Yeah.
that, but I didn't know all the terminology. I didn't know here's where a lot of people mess up, in my opinion. They'll go, all right, let's do this deal, 12% interest, first position lien. This is basic terms that most people do. First position lien, 1 year term.
Mm-hmm.
Okay, great. That sounds fantastic. But what did you put in the paperwork that if in 1 year it's not financed out, what did you put?
Yeah.
So the deal can just lapse. I mean, you could try to force the foreclosure at 1 year, but you don't want to force a foreclosure on your bar. Like, you don't want the property back. So what do? At 1 year, interest rate just went up.
Yeah.
Right. So now, if it's not your fault, I'm very lenient. So here's how I teach too. I'm very lenient in person, but my paperwork can let me be an a-hole. And what I mean, like I try to teach this. I'm like, your paperwork needs to be as strict as possible. That way you are able to enforce it. But in person, if your borrower was actually communicating and it wasn't their own fault and it just fell out of contract or the market shifted a little bit and they're trying their best, you don't have to enforce any of these penalties or these hiked interest rates. But if they're not communicating, if they're dropping the ball, if they're just behind 8 months on the rehab because they don't know what they're doing and they said that they did, well, my paperwork states I can be pretty strict now.
Yeah.
Right. So I want my paperwork to be as strict as possible. But then in person, I could be like, don't worry about the penalty. I know that was just an honest mistake. We'll sell it next month.
Yeah, so you go you look at the everything, the whole situation. You don't really just punish them to punish them to
That's
make
hard
more
money.
money. Like you want to get the deal, you want to get the deal done. You don't want to abuse them, and that's good, man, because you want to deal with somebody that understands, right?
It's a
I mean, we're all
relationship.
committed. We're all trying to get this done. As long as the borrower is communicating, things happen in flips. I think we all know that when it comes to real estate, markets change. I mean, nobody expected 2020 to happen. So as far as like lumber and everything that happened after the pandemic, it got pretty crazy, right?
Yeah. Yeah,
So
it's a relationship. I don't want to
it is.
punish anybody. I just want the ability to enforce rules and regulations if these people aren't doing what they say they're going to do. I always tell you, whether you partner with me or just in life, you want to be like, if you want to be in business relationship with me, do what you say you're going to do, and I'll reciprocate. If you don't, then I will be hard to get along with, right? Like if I sent you an email on a Monday and you're not going to reply till the following Monday, you're gonna know that I'm a little antsy, right? And then what I'll do is have a conversation with you. I used to be a little bit quicker to like be a pain in the butt, but now like I'm a little bit more understanding. I'm 38 years. I'm getting a little bit more patient order, but I will have a conversation with you and be like, hey, that's not acceptable to me. And remember, you don't have to do business with me. So like I'm not dictating this as if you're my kid. I'm saying like if you want to do business with me and you want it to be amicable and easy going, if I email you on Monday, I think Wednesday, unless you're traveling, sick, whatever, I think Wednesday is a pretty good turnaround.
Yeah.
Right. And so once we have that conversation, here's another thing is I don't hold people to things they don't agree to. Right. So if you agree that you're going to email me by Wednesday and now it's Friday, we got a problem. So it's just, I say all these things too, because if you're going to get into lending and you're going to get into real estate and you're going to partner with people, I always say like sit down and have a conversation as if you're getting divorced first.
Yeah.
Because everybody's excited when you're first partnering. You're thinking about the money and all the deals you're going to do together. And if everything goes right, let me give you a newsflash in real estate. Nothing goes according to plan, okay? So you actually need to have that first or second or maybe third conversation as if like, what happens if we lose on this deal? What happens if this deal goes over timeline 6 months? What are your expectations? And y'all need to be on the same page there before it happens, because I promise you this, if it happens and you're not on the same page, now it's a wreck. Now it's a train wreck.
Yeah, absolutely. I tell people all the time, before you get started, have those tough conversations up front, get an operating agreement written out, exactly what everybody's expectations are, and get it done the right way. Expect the worst, but work hard to bring out the best.
Agreed.
Right?
Agreed.
Yeah. Now, how do you measure your success in investments? Is it per percentage? How many deals you're doing per month?
So as I say, when you're a private money, if I'm just talking on private money lending, I said there's three things. You got three jobs as a lender. First one and foremost is keep your money safe. I would rather sit in a 0.1% Chase savings account, losing 4% every year to inflation, than be in a high risk investment. Right? I'd rather lose 4% a year than lose 50, 80, 90% of my investment rushing and being I just say dumb with it. Okay. Like if you're putting your money in places you don't understand, if you can't explain it to a 5-year-old, you shouldn't be invested in it. All right. Yeah. So if you can't, I would rather it sit. So first and foremost, keep it safe. The second one is a good return. This is successful. If you're going to be number two, you're going to be successful with lending, a good return. So a good return is 8 to 12%. 8 to 10, that's fine. Right? You're doubling inflation at 8%. Hopefully it could be 6, but let's not get into that because it's hard to tell. But let's say inflation's 4. Let's just agree to that for the sake of the podcast. 8%, you're doubling that. So you're making a net 4. Great. Way better than it's sitting. But if you're private money lending in real estate, 10% is kind of your minimum, in my opinion. And then 10 to 12 to 14 is a happy spot. If this is a very, very established borrower, 100 plus deals under the belt. They always do what they say they're going to do. They've always gotten your money back. 10 to 14% is great. The third success is getting a great return. Now we can chase those 15 to 40 to 50% returns. But that's only if you're risk to tolerate it. But remember, that's still referring back to option one, keeping it safe or as safe as possible.
Yeah.
So we never want to chase 25% returns for the sake of chasing it. If you're a Bitcoin person, if you're a crypto person, no offense, but you understand this game, and that's fine if you completely understand it. You know that your money can go up 300% overnight and go down 300% overnight. If you sleep fine with that, go for it. I don't. I do not want to play that game. I've never liked that game. I tried day trading with paper money for a week, and I was in shambles with paper money. It's not for me. It's not for my risk tolerance. It's not for my anxiety. I would rather you get me 12 to 20% consistently. I'm good. I'm good. And so where's your risk tolerance? So for success for me is following those three things and then ideally hitting three above average return 9 times out of 10. And I will still put my money in 10 to 12% investments occasionally when I have too much money sitting on the side. I would say that's your fourth goal as a private money lender too, keeping it all moving. Some people aren't doing the math, right? Let's say you had $100,000 and you put $50,000 into an investment making a 30% return. Fantastic.
Mm-hmm.
But if you only had 50,000 of that working for the year, and the other 15,000 was sitting in a no interest bank account. Sorry, the other 25,000. I forget the exact. Let's try that one more time. I apologize. I lost math a moment. 50. You have 50 grand to invest.
Yeah.
You put 25,000 in a 15% return. Great. 15% is great with the 25, but the other 25,000 is not doing anything that year. For the year, you actually made half of 15%. You only made 7% return because you didn't keep all your money working. That math makes sense?
It does, yeah.
Okay.
Because I mean, the point is that if you're a lender, you got to put your money to work. That's your number one. It's your best worker. So send your worker out there. Send your star quarterback out there to throw some bombs and get some touchdowns. Right?
Put the whole 50,000 to work at 11% versus half of it at 15, and you're doing better.
Yeah, yeah. Now, when you say at 11%, we're talking about yearly, correct?
Yeah, annualized, right? So 11% either cash on cash or annual or compounding monthly. First of all, if you did the math on that, you would see why it would never make sense in real estate. But that's not what we're talking about. We're always talking annualized numbers here when it comes to real estate. Just the same thing with, I mean, people. I don't know why people get confused. Same thing with your bank account. Your bank account, your high yield savings account is not paying you 4% interest compounding daily or monthly, right? That'd be insane. No. It's always annualized. Same with your credit card, anything. It's usually always seeing annualized. Occasionally, you will have a borrower offer you 20% cash on cash. This does happen sometimes. So they'll give you, if you lent them 100,000, they're going to give you back 20 grand. These deals do pop up.
Yeah, I just wanted to be clear because I know a lot of people are new to this and to the language. I don't want them to get confused. When we talk about returns, we're talking about an annual return. So the way that I work with a lot of my private lenders, I usually give them 12%, and it makes it real simple. It's 1% per month, right? Yeah. So if they're lending me 100,000, 12% for annually, 1% a month. Like it makes it very simple for everybody to understand. For all the listeners out there too.
And 12% actually makes the math easier than 10%.
It does. And they like 12%, man. They
12 is great.
They want me to keep the money. They're like, all right, what's next? What are we rolling it into? So
yeah, because once they get the money somewhere, it's not these people are busy. These people, they could go find 16, 18%. It does exist, but do they want to take the money out, leave an established borrower that's already paying them back, let the money sit for a little while they headhunt for a possible six? No, they don't. Just keep the money there and keep it working.
Yeah, that's good, man. So now how do you, let's get into your personal life. Like, how do you balance your professional and personal life? I know you mentioned that you were doing a lot of traveling. You want to talk about that?
Yeah. So I'm the frugal investor on Instagram for a reason. I do not like to spend money on things. I live in a modest $165,000 townhouse. Our mortgage is $700 a month. I have a big. it's nice, man. And that's our only. Actually, not my debt. It's in my wife's name. I don't have any debt. All of my rentals are paid off. I don't owe anybody a single dollar.
So before we get into that, you mentioned I've seen a couple of your reels. You're talking about people getting out of debt before they start investing. Mm-hmm. Can you touch on that a little bit? Because I know in New Jersey, I think everybody's up to here with that because it's expense living. A lot of people use their credit cards to get by. If you want to get into private lending, I think it all talks, it starts with how you budget yourself and what type of bad debt you're putting on yourself. Can you touch base on that a little bit to give some
Yeah.
people some tips if they are in debt, how to get out of it, and the importance of staying out of it?
So my preference is no little to no debt. Now your mortgage is usually like not included in that, right? Because most people don't have, especially if you're in Jersey, most people don't have $800,000 to go buy their house for cash. They're gonna have to finance that. But that debt's usually between 6 and 8%. Over 8% is, especially anything outside of a mortgage, is when you really, in my opinion, should focus on paying that off. Because remember, saving money is kind of investing, right? Like the way I look at it is, if you're gonna pay off a 10% interest debt that you're carrying, well, that's 10% that you're saving. So it's an investment in a way to pay that off. Another thing, it makes no sense to me, and this is just my opinion, you're going to go do a private money loan for, let's say it's a micro loan at $30,000 and you'll make 15% return on that. Fantastic. But you're carrying $30,000 in credit card debt at 28%. That makes no sense to me. You're trying to chase 15% while you're paying 28. You're still a net 13% in the negative. So, in my opinion, before you start, you first need to evaluate your entire personal financial situation. But any debts above 8-ish% get in the red zone for me, and these are typically need to be paid off. Now, let's say you're really good at leveraging debt, really good, and you know what I mean by leveraging, and you understand what that means. You understand like debt arbitrage. If you understand these words I'm saying, then now I'm getting into the very small percentage of people that can keep an 8% debt or borrow an 8% debt and lend it back out at 12 to 15. That's debt arbitrage. There's nothing wrong with that if you're really good at it and understand the risk. A perfect example of this is you're going to get a HELOC on your house. So they'll give you equity, they'll give you a home equity line of credit against your house. And let's say you got $200,000 in equity in your house, they'll maybe give you 150, 120 of that. They're going to give you that at, right now, the rate's around 8%, if I'm not mistaken. You borrow that against your own house, risky here because you're putting an extra lien on your house. Okay, so understand the risk, but I'm assuming you do if we're on the same page here. You're going to borrow the 120 at 8. You're going to lend it back out at 12 to 15%. Love it. Love it. You're making 5 to 8, 9-ish% on the bank's money. It's an infinite return. It's not your own money, and you understand debt arbitrage. And more importantly, you understand the risk. But that we're talking about 1 to 5% of people, if that. So let's get back to the original question. In my opinion, all bad debt above 8% and not on a mortgage should be attacked first. Pay all that off. Not only will you feel better and sleep better at night, but you will actually be able to move a little bit faster and take a little bit more risk in other endeavors without putting your personal financial side at risk so much. Because there's nothing worse than already being in consumer debt and then going to get into an investment to try to pay off the consumer debt, and then the investment goes bad and now you're double debt. This is the worst position to be in. Yeah. This is just my opinion. There will be people that argue against me. There will be people that have points for that. I'm giving you my opinion and my risk tolerance. So I have no debt, literally no debt, other than obviously I own investors through the company, but all that can be paid off by liquidating the assets. I have no personal debt. My wife's name's on this mortgage, and that's our only combined debt, I guess, if you will. That's just like how I like to operate in life. But I'm very frugal, very intentional with my spending. I've also spent 6 figures this year just in travel. So I'm not cheap. I'm very just intentional with my money and where I spend it.
That's good, man. That's really good stuff. Now, any resources or any books that's inspired you or you think will help some of our listeners and viewers?
Yeah, so Rich Dad, Poor Dad obviously is a staple. This just gives you an example. If you grew up with the poor dad mentality, it'll give you an example of like why you don't have to always be working for your money. Most of us are taught that. We think there's no other way. And so we get a job at 20 to 25 years old, out of high school or out of college, and then we work until we're 60, and it won't matter your income. You can make $250,000 a year. You'll have lifestyle creep that keeps up with that. So you'll be doing just as well financially as the person making $50,000 a year because your bills increased at the exact same pace. And you'll do that until you're 60 with the hopes of retirement. And that's if you ever put enough money away. By the way, only about 15 to 20% of you will do so. The rest of you are in a world of trouble. And I'm not calling out individual names here. I'm giving you statistics.
Yeah.
So I know doctors and lawyers and CRNAs through my wife that make $300,000, $400,000 a year, and they couldn't get $2,000 out of the bank if they had to. Okay, so this is a real problem. I don't want to say in America, but I know the American statistics, a real problem in America. So anyway, learn the Rich Dad Poor Dad, The Millionaire Next Door. This is basically being intentional with your money and learning how to like not live above your means. Uh, Millionaire, Richest Man in Babylon is another one about paying yourself first, basically saving first.
Yeah.
Great story. I know there's others, but it's been a while since I've been into those beginner stages book, which everybody should read. But those books were, instrumental in helping me understand. Oh, it doesn't have to be this way.
It doesn't have to be this way. That's on my list. I haven't read that yet, but I'm
Yeah,
definitely going to check it out.
awesome.
So, what are your future goals for this year? And what do you plan, even ahead? Like what is it that you want to, do and achieve within your company?
I'm always having this dilemma now. Like, here's one thing about being an entrepreneur and being like go 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 all the way through my 20s and even late into my 30s here. The question I think we all start to ask ourselves, or at least I think that you should start to ask yourself, is when is enough enough? So about 3 years ago, I did a huge restructure with my partners and a lot of business. I owned a CrossFit gym. I had a lot of things going on, and I got out a lot of things. I sold out, or I diminished my role, and a lot of it was planning to do this 9 month sabbatical, or not sabbatical. I'm still working, but 9 months of traveling with my family. And we traveled a lot before that. My daughter's 6 years old, and she's been to 30 countries, so we do a lot of traveling. And then I don't know if you know this, but I have a YouTube channel with our family. We have 1 million subscribers, so that's another business that's taken over a lot. Like takes a lot of our time. So I think for me, like the goal is sustainability. The goal is like not always saying yes. I say no a lot more. A lot of you starting out, you won't be able to say no in the beginning, and you shouldn't. You got to go. Your time's not worth a lot yet, but you will get there, and eventually your time becomes the most valuable thing. And well, health and time. And so for me, it's like I'm very intentional in what I agree to or what I say yes. I got 6 figure deals that come across my table, and it's really hard for me in my entrepreneurship, my money making mind. But now I don't calculate the returns first. Okay. I'll try my best. I'm not perfect at this. A 6 figure return, a 7 figure return, those things still attract me, but I'm much better at getting excited and then breathing, setting the numbers to the side a second, and then calculating my return on my time. Okay, the 6 figures is great. The 7 figures is great. But what is that going to cost me with time with my wife, time with my daughter? That equation has now overtaken the money one, right? Now you can get into stupid money where people always do the thing like, would you go to jail for a month for 100 million? Yes. Yes, I would go to jail for what? I would go straight to solitary confinement and I would eat cheese and crackers for a month and sit like it's a dumb question right now, but you're going to do 10 years off the table again, right?
Yeah.
If I was 20, maybe I would have taken that, but now I'm 38. But so let's get stupid numbers, stupid agreements out of the way. Let's go. It's like if you got a 6 figure deal, $1 million or $100,000 6 figure deal, but that's going to take a 10 years investments or a lot of management or a lot of property management or in a partnership I don't necessarily like. Well, now you're sucking my life away.
Yeah.
Right. There's a quote, the cost that we pay for anything is the amount of life you give up for it. I love that quote.
Can you repeat that?
The true cost that you pay for anything is the amount of life that you give up for it. So people like to say like, oh, I'm only my car payment's only $1,000 a month, right? But that might take them 7 days at work, 7 days, full days at work. And this is if they make a decent income. For most, that would be 14 days at work to make that car payment. So you're not paying $1,000 for the car payment. Yeah. You're paying 14 days a month, half the month, every single month is what you're sacrificing of your time, of your life to drive that new Escalade.
Yeah.
That's going to get scratched, dented, and depreciate to almost nothing in 5 years. Mm-hmm. Meanwhile, like you're saying, that's what you're ultimately saying. Like you're saying like, hey, half of my life is what actually it's more than that in consumer debt, including mortgages. More than half of your life is worth sacrificing at work for things.
Yeah.
Most things in which you won't even care about from the time you purchase them. This is statistical, by the way. From the time you purchase them till about 3 to 6 months later, they don't even matter anymore.
Yeah.
That's crazy. And the whole world, I'm not trying to get conspiracy here. It's real. Advertisements. The whole world is focused on you removing you from your money.
Mm, that's
It
good.
is marketing, advertisement, all these upgrades, apps, all the apps on your phone. Most of you could get a $10,000 a year raise if you deleted all the apps off your phone.
Without a doubt. Without a
Easy.
doubt. You'll be so much more productive on your
Yeah.
day to day, whether it's growing your business or even at work. You'll probably get a
Yeah.
promotion because you'll be more focused.
Yeah,
No, but
not,
that's
not
so
not
good,
only
man.
in time save, but like the delivery apps, the Uber, like all the apps that are designed to make your life more convenient, but
Yeah.
remove your money from your pockets.
Yeah. Nah, amen to that, man. That's a great way to look at it. Before you make a big purchase, think about how much time is going to cost you in order to have that luxury, right?
Yep.
That depreciating assets not even going to bring you a return, you know.
Yeah.
So yeah, is it really worth it? That's good, man. So, last question: what inspires you to continue on your day to day?
I'm just wired this way. I'm just I mean obviously in the beginning, and it's still to a degree, it's the owning my time. And now, like I say that, and I feel a little bit hypocritical because I give up. Like I don't need to do this podcast, but I really love teaching. I really love telling my story, and hopefully, this inspires one piece. I'm not getting paid for this. Full disclosure, like you know, I hope you don't care, but
Yeah,
it's like we're exchanging time, we're exchanging information,
yeah,
we're getting value and giving value, which is great. But I don't need to be doing these things, but I always will because a part of me is just built that way. But like like I don't. I'd have to say, like, I don't have a number anymore. There's no number because I've also learned that the number doesn't matter.
hmm,
The number doesn't, to a degree. Now, if you got nothing, the money matters. I don't want to discredit people that are out there making 30 grand a year and piled up in debt and trying to get out. I don't want to sit here on my high
yeah.
horse
Did
and
we
say
get
money
frozen?
doesn't matter. Did I freeze?
You froze.
Am I back?
You're back.
Okay.
Diego,
I
we
don't.
good?
What I say is I don't want to sit here on my high horse and tell somebody with $30,000 in income and $50,000 in debt and struggling to pay bills that money doesn't matter, right? That's being disconnected. And that money does matter to you to a certain degree. But after you get to a certain amount of money, it just becomes another goalpost that you're going to inevitably move. You're
Yeah,
going to inevitably move that goalpost. And so, like, same thing with like the subscribers. Like, there was 1 million subscribers on YouTube, and then we hit that, and then we were like, now what? We're going to chase 5 million, 10 million. So the subscriber count doesn't matter anymore to us.
yeah,
So, so for me, I think the next goal, like the next thing that's inspiring me, I think it'd have to be like to teach others. I think if I was gonna, I have a community. In full disclosure, I do have a community. I won't pitch it unless you allow me to, or say I can at the end of this. But I thoroughly enjoy now helping, seeing somebody else achieve it. Like
yeah,
that like really gets me going. Like if I close on another deal, it's another deal to me. I'm closing 15 deals a month. But if I see somebody close their first deal because I helped them get through that,
yeah,
that's cool. That's
yeah,
really cool to me. That
yeah.
that gets me excited. That gets me motivated.
Absolutely, man. I had the same feeling. I saw this quote this morning that really inspired me. It was, "We rise by lifting others."
I
Right?
love that.
Free people. You know,
Yeah.
and
Was it
it's
is that a rising tide lifts all boats or something like that?
yeah, yeah,
Yeah.
exactly, man. And there's a just a passion I have for that. That's why we started this podcast, right? To share information, to get people unstuck, and to motivate them to take action, but the right action, right? Hearing people like you talk, like you're not talking them off the ledge. You're just telling them exactly what they have to do. They have to be calculated. They have to be prepared to not take the risk. You know, take the risk, but a calculated risk, right? Something that'll bring them, that'll keep them safer than the average. Uh, stock market or whatever they're trying to pitch to you on a day to day to separate you from your money.
Yeah.
So I have that same passion. I know exactly what you mean. At first, when we started as entrepreneurs, we're like, oh, my first 100 grand. Then you reach 100 grand, and you're like, now what? You know what I mean?
No,
And
when
you think you're
I
gonna get
tell this
from
story,
it, but you really don't. Like it just ignites something else, and little by little, you start peeling that onion and start seeing what the real passion and purpose is.
agreed. I think I was the million for me, right? When I finally hit the million, I thought like streamers were gonna come out of the roof and then people were gonna have a party for me. It was literally, I'm like looking over here right now, into like obviously this is a backdrop. I'm looking into my kitchen and where my wife and I sit at our stools
Yeah,
at the bar stools at our kitchen counter,
yeah,
and we were at the time we were doing our net worth meeting every month. Now we do it probably every 3 months because of our travels and busy schedules and have a 6 year old. But at the time we were doing our net worth pretty much every month, updating that, making sure expenses were fine. That's another thing that I teach people to do. You should be doing net worth meetings with your family, with your significant other as
yep,
often as possible. Get on the same page, have similar goals. But anyway, we were sitting there and the numbers penciled out. And we blew past, seven figures, and we kind of looked at each other and we were like, oh. And then nothing happened. You know what we did? We finished doing the budget. we finished doing the money. We didn't even go out to eat. It was late. We didn't even go out to eat. I don't even think we gave each other a high five. It just happened. And I think that was that was cool. Yes, that is cool. But it was also a telling sign to me about that question. I'm gonna bring back to those that are maybe a little bit further along in your journey that are listening to this. And maybe have that enough is enough. And that doesn't mean you have to quit, but maybe, just maybe, we should just get a little bit more intentional at some point, a little bit more time calculated versus return calculated. And I think that if we all did that, did it consistently, we would find more happiness. Happiness all the time is a myth. That's not true. But I think that the goal is to be as happy and or as content as possible more often than not.
Yeah. Yeah, that's awesome. That's some gold right there, man. That's some gold. I love what you were saying too about your marriage. We do weekly meetings also. We do like a weekly breakfast meeting where we go over our goals, finances, long-term goals, what we need to do throughout the week. It's really how we, able to communicate and keep everything together.
Yeah.
And yeah, I remember when my first mill, it was by accident. I was just trying to figure out my net worth, and we were checking our assets, and then they're like, yeah, you're worth this much. I'm like, I'm a millionaire.
right, yeah.
I didn't know.
Because and
I
one
don't
more.
feel like a millionaire.
That's the same thing. But nothing changed. Like our spending habits, like we travel a little bit nicer, I guess. But like nothing really changed. But we're still in the same house, drive the same car. But it's I think that for a lot of people, I want to get this message across too. This is where I'm at now, and I'm 38. But I remember, and I know a lot of you feel this way if you're listening and you're just getting started. You're 25, maybe you're 26, maybe even 20. It is going to feel impossible. And actually, I want another tidbit of information. It's going to feel impossible a few times.
Yeah.
Like even I remember when I hit 100, and I was like, "Oh my God, how much did I have to save? How much did I have to like stress and worry and sacrifice?
Yeah.
How am I supposed to 10x this? Like it's impossible." I used to say that's impossible. I used to say it's BS. Like you can't do it. But I promise you, you stick to it for long enough, it will compound for you. And eventually the numbers become bigger, so the compounding happens bigger.
Yeah.
But on the converse is true. The longer you wait, the longer you buy consumer debt, the faster it compounds against you. And you can dig a hole just as fast, or I would argue much faster, than you can climb your way out of it. Yeah. So be very careful and be very intentional. You can actually acquire $500,000 in debt very quickly with a stroke of a pen by buying a house that is too much out of your comfort zone, way faster than you can accumulate $500,000 in liquid net worth. So that's why I argue debt is much easier and much more attractive than the other way. But I promise you this way is worth it. You just got to focus for long enough.
That's good, man. It's kind of like, eating healthy, right? If you eat unhealthy, you get fat real quick.
real quick. I always say,
you're up 20 pounds.
Yes, and then it's so hard to lose it and to get back to the physique you wanted. And I don't know why life is like that. Maybe because it just rewards those who maybe want to work a little bit harder or be a little bit more disciplined. But it's I work out a lot. I've been working out, for 18 years. I've competed and everything, but still to this date, I can take a month off from the gym and I feel like I lose 90% of my gains. Yeah. Like 90%. Then it takes me 6 months to build it back. I don't know why it's like that, but it's like that.
I feel the same way. A week. I'm like,
right. Yeah. Shirt starts fitting a little loose.
yeah, exactly. Oh man, this is good, man. Thank you, Jon, for coming on. And yes, you are able to pitch your community, everything you got going on, your handle. Please share it with our listeners so they can follow you and just keep getting this gold that you got to offer, man.
Awesome. So if you want to follow me, and this is what I preach, if you want to follow me, you should always follow people first before buying into their community, their mentorship, anything. Who are you learning from, and do they prove it? Please don't just buy something based off the flashy stuff. This is my opinion, and I think that it's probably statistically true. So if you want to follow me, The Frugal Investor on Instagram, or you can follow our bigger YouTube page, The Schoeller Family. I also have a bunch of real estate YouTube videos on YouTube as well. Jon Schoeller, that's under my name. But then, yes, I run a community along with my partners, the Phi Couple. It's called More Than Money, and we named it that for a reason. We want to teach people about real estate, but not just to own real estate and make a bunch of money, to be intentional about it. And so something that took me a long time to learn, but we teach all the ins and outs of private money lending. buying multifamily, just like building up passive income so you can live life on your own terms, whether that's quitting your job and being a stay-at-home, family person, or just being work optional, or doing like what we do and just going to travel for 9 months. So if you're interested in learning that, the ins and outs, and being taught by the people that run the actual community, it's More Than Money, mtmcommunity.com. We would love to have you book a call with us. But other than that, that's all I wanted to pitch. And but follow me first and make sure I'm somebody you would want to learn from.
Awesome, man. And yeah, we're going to put all the links and all his information in the show notes. So make sure you like, you comment, and you share this episode. Jon, thank you for coming through. Great wisdom that you dropped on the listeners and watchers. We really appreciate your time, man. Thank you for everything.
Yeah, Marco, no problem. I appreciate you having me on. And before you jump off, I want to grab a picture of the screen so I can tag you.
Yeah, for sure, man.
Yeah. I don't know if the podcast's still going. Do you want to close it first, or?
Yeah, we can close out. All right, guys.
Okay.
See you on the next episode.